Welcome to RANsquawk morning briefing for Wednesday, 29th of July 2009. Just going up towards 9 o'clock now in London, so a quick check around the markets and where we stand at the moment. One of the major movers was quite a significant drop in the Shanghai Composite Equity Index heading in towards the close. Did close down some 5% for the session, underperforming its other Asian counterparts. The Nikkei did finish up some 0.3% on the session. A couple of key reasons being pointed out by analysts. Firstly, obviously earnings season as well in China, some pointing to some poor corporate earnings coming out as well as pretty negative outlooks in their forecast going forward. Also, allied to that, increased press coverage on a big slowdown in second half loan growth after a punchy first half being felt on the back of various stimulus measures in China. Secondly, a Beijing magazine press piece saying that the largest two state-owned lenders, ICB and CCB in China, will impose loan growth caps in the second half of 2009. And as well, the steelmakers and commodities sector in China coming under a bit of pressure. Steelmakers down on EU applying a 5-year duty on imports of Chinese steel pipes being felt as well. That drop late in the Shanghai session did weigh on European equity futures ahead of the cash open, which did strike session lows, and in tandem with that move saw some risk-averse trade in the FX markets. The dollar took a bid index, the dollar index hit a session high, which in turn as well weighed on WTI crude futures, which did fall over $1 on the session in early trade. However, once that did subside, we have come back slightly now. As I say, coming up to 9 o'clock, most of the equity losses being paired in the futures in Europe, and seeing a bit of a bounce off those highs in the dollar index as crude lifts off its lows. Just recapping some of the key headlines from overnight. Fed's Yellen said the FOMC needs to evaluate next step in terms of Treasury buying. Says will not forecast or rule out a double-dip recession. Doesn't want Treasury purchases erased from toolkit. Elsewhere, ECB's Papademos in the Handelsblad article said that it's relatively easy for the ECB to withdraw liquidity. Papademos so said he will not tolerate any inflationary signs. From the UK, just one article out of the Telegraph that's worth just recapping. VAT, David Blanchflower says madness to raise tax in January. Alistair Darling risks turning recession into a depression if he puts up the tax as planned from 15 to 17.5% in January. That's according to Blanchflower, who is obviously a former MPC member, having left the Bank of England in May. Then elsewhere, equities very much dominating in terms of European headlines for individual stocks. Just recapping a few of the highlights. Sanofi Aventis had a Q2 adjusted net X items number at 2.27 billion euros. That was against a profit of 1.75 billion a year ago. Their sales beat expectations at 7.44 billion, and Sanofi raised their 09 EPS growth forecast by 10%. Elsewhere, sticking in the CAC, ArcelorMittal, they had a Q2 net loss of 792 million, which was a bigger loss than analysts were looking for at 375. And elsewhere, carmaker Peugeot, their first half net loss came in at 962 million, not as bad as analysts were looking for a loss of just over 1 billion. We've just seen as well, just hit the wires, Nissan in Japan, their numbers as well exceeding expectations, losses not as bad as expected, and that has boosted Renault shares, which of course partly owns Nissan, to session highs. As well from Eurostoxx, banking in Spain, Santander, they posted a first half net of 4.52 billion euros. That was above the expected 4.25 billion. Looking ahead then for the calendar, today we'll see the German state CPIs. We've already seen Saxony come out. We'll be eyeing Hesse and Brandenburg at 9 o'clock. 9:30 has UK mortgage lending, and then for money supply, and then the 1:30 today will be durable goods, followed by the all inventory numbers at 3:30, and then the Fed's beige book at 7 o'clock this evening. Other than that, coming out of fixed income, we'll have a Bank of England, a DMO £5 billion 2014 conventional tap, followed by a BOE reverse auction this afternoon. And from the US, eyes will closely be on the 5-year note, $39 billion worth, following the sharp downward move we saw in T-notes on the poor take-up on the 2-year yesterday. That will be in focus, and we will also get a Fed outright Treasury coupon purchase 2019 to 2026 today.